All right, we are live. Good morning, everybody. Happy Tuesday. This is the morning show here on Stock Market TV. Yes, Dawson, we are going to talk about the getting thinner market. We were just talking about that actually backstage. I learned a new phrase this morning, or indicator. I learned about the Hindenburg. What's called the Hindenburg indicator? The omen. The Hindenburg omen. Why are there so many doomsday omens indicators? I need a happy indicator for once. We don't have any of those. Let's make one ourselves. We'll talk about that. So we'll talk about the somewhat thinning breath. We'll talk about Nvidia, which is officially in a correction. Sound the alarm. Sound the alarm. I don't have any alarm sound effects. I wish I did. I should get one. Let's see what else is on the radar. Nvidia, market breath. Oh, David Lundgren is today's guest. We'll be on at 9. We'll have Kenny. We'll have Patrick. So that's the plan. Let's go. Where's my like button? There it is. It's Boogie. Hey.
Good morning.
Why can't we have like a happy indicator for a happy market?
I prefer my Hindenburgers medium rare with cheese and bacon.
I just want a sunshine and rainbows indicator. That's all. That's what I want.
Let's make one.
Alfonso says it doesn't sell. It won't sell. I don't care.
Hey, has that boy learned? Huh? It doesn't. And that's the point. And that's why shops like Hindenburg do this thing. Call it a market omen. Like, what is that? All of these stupid things. Look at all of the clicks and likes that they get when they're shared. I saw somebody share a chart of the Dow Jones Industrial Average, zoomed out almost a century, with like a multi-decade rising wedge and then a red arrow that showed like a 75% drawdown. This thing had like 5,000 likes. That's just the world that we have to live in.
That'd be epic.
And that's the audience that we are often providing research to, unfortunately. So
that would be epic if that were to happen. 75% drawdown. What?
Yeah, man.
Anyway. All right. Should we do a state of the markets a little bit?
Yeah.
All right.
We'll talk about Nvidia.
I know.
Yeah. Let me open up the deck here, see what we're working with. It'll be a great show today.
Overnight markets are down, for whatever that's worth, except for crypto, obviously.
So crypto looks good. You know, Solana's still moving really slow out here, or not moving at all. Bitcoin looks excellent. And Caleb mentioned yesterday on the show, there's just a handful of other altcoins that are actually at cycle highs. So if we take it from the top here and just go straight to, let's go back to some of these charts from yesterday. I just want to talk about the tech non-top and then the Nvidia non-top. I don't really think there's anything more important than talking about semiconductors right here. Technology is breaking out to fresh cycle highs over the past couple of days. The Magnificent Seven stocks, which I think we talked about in good detail yesterday, are all doing very well. You know, you've seen Tesla, Amazon. Did you see the gap in Google yesterday? That's called a gap in Goog.
Gap in Goog?
The gap in Goog, right? So they're all there. And then you look at Nvidia. Say what you just said to me. Off air.
And we're in a correction. It's all over the front pages today.
Isn't Solana a David Sachs pump and dump? Nope. Solana's definitely not a pump and dump. Just look at the chart.
I mean, it is like the third or fourth largest cryptocurrency. So
we come up with these phrases and then they stop meaning anything.
Yeah, yes. That's a pet peeve.
Like what is a pump and dump?
Things lose all meaning. It pisses me off.
Did I just strike a chord?
Yeah, you did. Because things, you're absolutely right. Things lose their meaning and then they mean nothing.
We overdo it, and then nobody knows.
Used to have an actual definition, and
We
now
overdo
it's
it, and then nobody knows what anybody's freaking talking about out here.
God damn. Ugh. Anyway,
so we're actually really big on just creating our own words and phrases, like the scoop and score, the kickers. You know, we'll just make up our own patterns. I can't remember the last time I said head and shoulders, but can we throw up the Nvidia chart, because this is a potential head and shoulders top, and I shared it on the Twitter yesterday, and everyone says it's going lower. In fact, I had a number of people correct my technical analysis and explain to me that this is actually a bearish pattern, not a bullish pattern. I'll tell you what this pattern is. This is a reversal pattern in the context of an uptrend. By definition, reversal patterns have a much lower probability of completing than continuation patterns. Why is this? Because like Charlie Dow taught us a century ago, markets trend and trends persist. So you want to lean in the direction of the trend, even if you can identify a reversal pattern. You want to take other evidence, new supporting evidence, to try to draw some sort of a outlook on whether or not that pattern is likely to fail or complete. In strong bull markets, we see these potential topping formations set up all the time, and we want to lean in the opposite direction and actually anticipate their failure, not their completion. This pattern failing is a much higher probability outcome than this pattern completing. But because of all of these armchair technical analysts out there, they look at this and they think, oh, head and shoulders top, right? They read one article about technical analysis 8 years ago. They know the head and shoulders top. It's the most identifiable pattern in the market. Everybody loves it. People go crazy for it, but they completely lose sight of the fact that the underlying trend is what matters the most, and that these patterns actually fail more often than not. What do you think about that?
I trust you when you say these patterns, these meaning head and shoulders patterns fail more often than not.
The majority of the time.
I trust you. Okay.
Well, if they didn't, then Charlie Dow would probably have been lying to us when he said that trends persist, right? If every little potential reversal pattern actually completed and became a reversal, imagine how messy the primary trend would be. It'd be a reversal pattern into another reversal pattern into another reversal. That's just sideways.
Well, isn't that what this year has been?
I don't think this year has been sideways for a lot of things.
For Nvidia, it has been.
For Nvidia, it's been sideways. So let's talk about it. What are some pieces of supporting evidence that I'll look at when I'm trying to make a determination or a call on whether or not I think a top is likely to fail? I want a clean and clear polarity zone,
which we have.
Support level right here. You see it, bang, 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 right? I want to see momentum remain in a bullish regime. I don't want to see oversold readings when I'm trying to fade potential tops. An oversold reading scares me. Those are not tops that I'm really looking to fade too often, right? Momentum's not even close to oversold in the case of Nvidia. I want to see the underlying trend. And in the case of Nvidia, this is one of the strongest structural uptrends we've seen in recent history, right? So the structural trend and the primary trend are at Nvidia's back. I also am going to weigh intermarket evidence. In other words, what is the broader market doing? What are technology stocks or growth stocks or Magnificent Seven stocks doing? What does Nvidia's peer group look like? I think we just mentioned the other 6 Mag 7s are basically at new all-time highs. Nvidia is the only one that needs to play catch-up right now. Remember a couple months back, Spencer, when we were talking about Tesla in the same vein? Hey, all the Mag 7s are doing great, but look at Tesla. What's Tesla's problem? Well, look at what Tesla's done since then. Remember quarters ago when Apple looked like it was completing a top. And we said, look at all the other Mag 7s look great, but what's wrong with Apple? What's Apple doing? Apple's going to complete a top while all the other Mag 7s are rocking higher? No, it wasn't a top at all. Look what Apple has done since then. Look at semiconductors. The poster child industry group of this bull cycle. They've been weak since July. Nothing happening. Then look at Broadcom yesterday. Look at Micron. Look at some of the equipment names. Semiconductors getting back on trend. There's a huge catch-up move there for the whole industry group. Then this just happens to be the top name in it. I think everything is set up here beautifully for a little risk reversal. Fade this top, go for it. I want to see a shake and go, a little spring, right? So let's explore some downside like we're doing, it looks like right now in the pre-market. We did a little bit yesterday. Let's explore that downside. Let's see what the bears got. Let's see if they could slam it here today, or if we reverse and this candle I'm looking at pre-market down 2% in Nvidia turns green. That's what I'm looking for today. I think there's a really, really high likelihood that that happens right now. How's that?
Wouldn't you, as a bull, rather see a larger red candle than like right off the bat than a series of just generally bearish candles that aren't necessarily large?
I want to see him bang it lower, right? And try to break the pattern down. Give a good go at breaking the pattern down. Then I want a long lower shadow, right? Showing buyers stepping in, buying it back, reclaiming this big level here in gray or the red horizontal, right? And then you want to drop a VWAP from the pivot highs, the all-time highs, just earlier November, right?
Yep.
And that's what you want to use as confirmation. A lot of times people will use the pivot high on the right shoulder. You see that right shoulder high there comes in around 146, it looks like. You could use that too, but the VWAP's going to get you in and confirmed earlier. Hell yeah, Joe.
Yeah, I mean, do we think that, I mean, we're in window dressing season, right? So do we think that like people are not, like asset managers are not gonna just jump in and take any chance they get to buy the third largest stock in the world, right? I mean, I don't think that. I think they will.
You think they're dressing the windows? You're with me?
Yeah, of course. This is a known phenomenon. It's probably a little overrated, but of course it happens, right? There's real career risk out there.
I couldn't agree.
You got to own these stocks.
I couldn't agree more. I feel strong.
But also to that vein, who doesn't own these stocks, right? Like,
yeah,
everybody owns Nvidia.
Well,
everybody owns,
and the sentiment of the crowd is slow and resistant to change, right? Like when they latch on to a narrative and they come to accept and believe something, like Mag 7 mega cap growth is the only game in town. These are the best stocks. You have to own them. A lot of time, once the masses come around to agreeing and accepting that as a truth, it's no longer a truth. Does that make sense? They're always just a little bit behind the curve. So the masses are just getting to a point where they're like, oh, Mag 7, this is the only trade. You got to be in these names. Just as the rest of the market is really starting to work.
Yeah. Okay. I mean, look, and Larry, you're right. I kind of said what you just said, right? Everybody already owns these stocks anyway, right? Via the top of the indexes.
Because you have to beat SPY, Larry. It's just math. Because they're trying to beat SPY.
I don't know. I just like, I can't see a world where we're still in a bull market and Nvidia is not also going up, right? Like at the bare minimum, you get what you just got for the last 6 months, right? At a minimum, you just sideways chop fest, right?
Yeah.
But if the bull market is really going to keep going, is Nvidia really going to come down?
No, like, I think there's some confusion around the concept of window dressing, it looks like. So this is good. We're having Stephen Weitzel on next week. Somebody's actually practicing, actually doing it, and he's going to come on and tell you just how real this dynamic is. So we're going to have real advisors come on. It's not our opinion. Somebody's actually practicing, watching them dress windows is going to come and talk to us about how it works. So we'll leave that conversation for when he's on. So, yep, Avago is ripping higher. Nvidia is not. The rest of the semis look good. Software is kind of due for a cool off. Deserves a little digestion, right? So where are they going to rotate to? Can't have a party without the chips, brother. You can't have a party without the chips. That's how I learned it.
I was looking at Louis' ETF note from yesterday. This is sort of off topic. I was surprised. I guess I hadn't realized or had forgotten what a widespread there is. Like the top of the table was Argentina, and the bottom was Brazil. Right, like the very top and the very bottom, Argentina and Brazil. Right, huge dispersion there.
Yeah, I know.
Like Argentina has been like the best global index for the last whatever week, and Brazil has been the worst, and it's been that way for a while now.
It's almost like elections matter.
Yeah, I was like, wow, when's the last time you saw two neighboring markets diverge like that? So I thought that was interesting. But
One hole wants to see my cat, maybe for recess.
yeah, all right.
Yeah. Yeah, no, John, you make a great point. Can we get a Dixie chart? I got a Dixie chart. So this is a risk, right? But it hasn't mattered. The way I'm looking at the dollar now, there's two big things. I'm going to grab the chart as I speak to it. One is I don't think you're going to see any significant headwind or tailwind from the dollar until this range is resolved. And there is a big range here. And then the second thing is you want to think of it in a way that the dollar rallied from the lower bounds of its range back to the upper bounds of its range recently. And look at what stocks did. Completely shrugged it off. It's like it wasn't even happening. So if the dollar were to roll over and head back to the lower bounds of the range, if stocks were doing well amid a rising dollar and in face of a rising dollar, how are they going to do when that, when that stops and the dollar starts moving lower? So I think the dollar is set up to be a tailwind. Yes, if we get a breakout from this range, then we'll have to start, talking about it differently. But if we hold the upper bounds of this range and revert lower, I think that just becomes a tailwind to your end.
The upper bounds being like what, like 108? The upper bounds being like 108?
Yeah, so I'll pull it up here. Fonz, if you could get me a chart.
Or are you talking like the much bigger range?
No, 107 and a quarter, right? It's this range that's been in place since last year. And then the lower bounds, you see all those lows, 100 and a half?
I do, yes.
So that's it. You got like this $7 range here that we've been pinging back and forth from. And stocks have done well more or less the whole time, right? So the dollar has not been a headwind. If it resolves this range higher, I think that's when the headwind kicks in. But if it just keeps chopping around in here, stocks have proven to us over and over again over the past 2 years that they could do just fine in this range. And I think the same is true with interest rates. Until you get some sort of significant move there, some sort of resolution where we can look at, these charts of interest rates and say, the trend is now higher, or the trend is now lower, not sideways, then maybe you see some sort of an impact. But for now, I think the market has told us with interest rates as well, we're comfortable with where they're at. Growth stocks, even speculative growth stocks, can do really well with interest rates where they're
at. Speaking of ranges, what's been really quiet lately is oil. Super stuck, right?
Yeah, guys, I have significantly reduced Uber. What a disappointment!
Steve talked about this. He's feeding the ducks.
Yeah, what a disappointment it's been. If it's not a top, we'll get back involved soon. But there's just so much working against this stock right now. White House Elon is the scariest version of Elon. Okay, seriously, and it's just not a train I want to step in front of at this point.
We didn't even talk about the fact that GM shut down their self-driving car unit last week or 2 weeks ago. The Cruise unit.
Why try to compete? He's best friends with the president now.
So hard. It's so hard.
This company survived on subsidies. Nobody really talks about that for years.
What, Tesla we're talking about now?
They wouldn't have been viable.
Yeah.
They would have been gone a long time ago.
Well, the subsidies and the solar credits.
There's a long history of government help for this company. It's not new, but I think it's accelerating. So yeah, go buy Rivian. Good luck.
Speaking of EVs, EVgo is doing an offering this morning. It's down 20%.
Uber's definitely not dead. It's just, the market was starting to phase in this new growth and them dominating the taxi world. And now they're unpricing that. But they're not dead. They're still the leader. I order McDonald's from Uber Eats every weekend still.
DoorDash looks great here, right?
Unbelievable.
So it's not a question of I mean, actually, I do think the business model is probably deeply flawed, but doesn't mean it's not working, right? Wall Street. I don't think Uber's recent action has nothing to do with the fundamentals of the business, right? This is all just like you said,
speculation about who's going to own the future,
right? That's all it is.
And Google just looks fantastic. And yeah. Spencer, it's back to that theme. I don't know. Does anybody have like the real reason for why Google rallied yesterday? Because I listened to the whole Trump press conference with Lutnick at Mar-a-Lago, And Trump was raving about Sergey Brin and his meeting with the founders of Google. And then I came to my desk after that and I see Google up 5-6%, rocking to all-time highs. Kind of reminded me of when Mark Zuckerberg met with the incoming president and their stock surged to new all-time highs.
I think this goes back to what you said when AI became a theme a year and a half ago, and that was who the winner is going to be. You actually think? I mean, yeah, there's going to be some randos in there. There's going to be some random companies we've never heard of. But do you think that the biggest names in tech in the world are not going to also be the winners? Google, Meta, right? I mean, come on.
Yeah, I don't really want to talk much more about window dressing now. I want to save it for Weitzel, but Josh is saying they don't look at just their year-end statement. They look at all of them or none of them. I totally disagree. I have a lot of experience with people looking at statements, and I used to prepare taxes. And a lot of times they'll just look at that tax statement at the end of the year and see how they did. So.
All right, let's see. We'll have Kenny Glick on in a couple of minutes. We'll have David Lundgren on after that. We'll have Patrick Donawilla on after that.
PD.
What else was on the docket for today?
Running through my feed now.
Oh, I know Kenny's gonna talk about this QUBT. Definitely. I don't know. I saw some news. There was like an Alibaba took a write down. What else did I see? I saw SolarEdge this morning up, what, like 12%?
Huh. Why?
New CEO. No, that was last week. I don't care about that.
SolarEdge up 12% because that's just a normal up day.
Well, yeah, it's $800 million. It's
oh man, these stocks really something. You got a nice surge from solar energy, and they gave it all back over the past few weeks. So
that's always what they do.
Yeah,
they get these surges. This has happened like 3 or 4 times in the last 6 months. Right?
Yeah, man. Yeah. Okay, so tomorrow we have Dave Maz on to talk about the Round Hill funds. We'll talk more about the Mag 7 then.
Definitely.
Never underestimate. Yeah. The rigatoni, fantastic. Quantum computing remains hot. Kenny has just been all over it. He loves the rigatoni. I'm more of a penny guy. Yeah. But, rigetti does rhyme with spaghetti.
Do we care about the Fed cutting rates one more time? Probably not, right? That's all.
I'm so over the Fed.
Yeah, I think most people are over the Fed at this point.
So Baba, yeah, seems to be a nothing burger for Baba. I don't really know. Yeah, everything looks pretty muted here this morning.
It's muted ahead of the Fed, right? That's why it's muted. No.
So we get 2 o'clock fireworks. Fed's tomorrow or today?
No. The meeting starts today, but the announcement's tomorrow. So.
2 o'clock tomorrow fireworks?
Yeah, no, probably not. But that's what all the morning, when I wake up and I get to my desk and I see the headlines, it's overnight markets muted ahead of the Fed.
Yeah, makes sense. Makes sense.
I don't know, but it actually is quiet out there. Also, we're coming into it's the end of the year. Like nothing happens at the end of the year. You know how quiet next week is going to be? It's going to be dead.
It's a slow grind.
All right, let's bring Kenny on here, and it's probably not quiet. It's never quiet in his room. That's the best thing about what he does. So, Kenny, you ready? Let's do it.
It's been a long time coming. They ain't cuffing my clock, they tugging. Putting up numbers, 99 pounds, and I still kept it 100. Hold up. Yeah.
What's up? What up, homie?
What's up with this QUBT today?
Just don't short it.
Okay.
When you think it's about to go down, buy more. That's the name of the game right now. I heard you talking about something of being boring. I'm waiting for these boring days. I don't know when they're going to come.
That's what I said. That's the best part about what you do. It's never boring.
It really isn't boring. And yeah, there's just action, nonstop action. And there's always 3 new names. I mean, Sid U yesterday turned out to be a blockbuster. Did you guys follow that one?
What was that?
Sid U. SIDU is one of my lesser known space trades.
I have to admit, I
Take a
am
look,
not
Sid U.
familiar.
Yeah, Sid U. I gave it to you guys yesterday when it was breaking over 250. Wound up going about 690.
Oh my goodness.
So again, it's just like, again,
Hey,
it's right
Kenny,
now. Right now, the market's basically it's like a good class where everyone's got their hand up. Ooh, pick me, pick me. Johnny. All right, now Billy goes. Now it's like one after the next one after the next one. If you could find any more stocks in the quantum sector, they're basically all going to go up inevitably because that's how it's working right now. This is again the most reminiscent to 1999 I've ever seen, and it's fantastic
all
because
right.
it really is
So
that simple.
we know that in bull markets every day you get moves like crazy moves, right? But I'm maybe I've asked you this before, but I'm going to ask it again now. What was 2022 like from a pre-market opening gap perspective, right? Did you still have those crazy 40-50% moves at 8 o'clock in the morning?
Yeah.
Yeah.
I mean, it's usually pharmaceuticals or therapeutic stocks. There's always some news or an upgrade or a downgrade of some lesser known stock, which we'll talk about in a second. The pre-market has been, pretty damn exciting ever since it began. I remember there was nothing going on even before 8:30. You didn't have a system that opened up before
Yeah.
8:30. 8:30 was the original pre-market. You gave us an hour. Then they expanded it to 8. And now it's basically we're in the midst of 24-hour trading. It's happening right now in front of us. I don't really know how it's going to affect these gap plays that I do. If the market's liquid, there's really not much going on in 2 o'clock in the morning, 3 o'clock in the morning. So I still think we're going to get those gap reversions. But pre-market activity, it's incredible actually, because now it's starting at 4 o'clock in the morning, and you're actually getting some real volume at that time, which is bizarre. I mean, I don't know who's up, but it's more or less the algorithms trading, but it gives you a heads up sometimes, like for instance SOUN, when they gap up in the pre-market and they sell off, those prices are still in there in the algo. So when you make the turnover VWAP, that usually is your target to get back to, like SOUN yesterday, which was awesome. Once we got back above pre-market highs, it took off. So yeah, I mean, it continues to be an incredible pre-market. It's dangerous because you can't just set it and forget it. You can't use stops. You can offer out, but you really need to be at the desk to trade, especially with some of these pump and dumps where, you blink and they're down 20-30%. So, but the activity is there. If you have a decent platform, it's a lot easier to trade.
I would love to see a study just to show over the last, I don't know, decade or so, the growth of pre-market trading, because it was basically it wasn't non-existent, but it definitely was not mainstream. And
Right.
now it's thanks to Robinhood, which lets you trade 24 hours a day, like you said. It's definitely become more mainstream to the point where, like, my dad asked me about it, right? Like
Uh-oh.
the other day.
Yeah.
Uh, so it's definitely the idea that you can wake up and trade at 7, 8 in the morning. Is people do it now. I would love to see a study on volume and liquidity over the last decade, because I'm sure it's gone up and to the right.
Oh
Tremendous.
yeah, for
Yeah.
sure. And again, the pre-market activity with the earnings reports, that's really, you know, never before were you able to get right at the earnings release. So when they're releasing earnings at 6:30 in the morning, you have a liquid market. So it's a little bit, more conducive to help you out. But again, the liquidity is still not there. That's why I like these crazy, Qubit, for instance. You got
Yeah.
17 million shares traded on this thing already. It's like the market's open.
Yeah.
Even when a JP Morgan reports earnings, you're only getting a couple 100,000 shares, which gives you the ebb and flow of the feel of the market, but you still got a little danger there with the bigger spreads and the lack of liquidity. That's why I go to a stock like Qubit this morning and all that type of stuff, like SIDU yesterday. And, but I want to talk to something, talking about historical stuff. This one makes me laugh. We've been talking about SEDG, SEDG, one of the ones that hasn't really, come out of the Andy Dufresne. It's done all right, not bad, and went shoved back in. So yesterday there was some unusual activity in it late in the day, and it turns out Goldman Sachs has upgraded the stock. Now, forgive me if my math is off. The stock closed yesterday at 12.50. They upgraded it from a sell to a buy, which is pretty dramatic.
That's a double upgrade.
Yes, it doesn't really get that more cut and dry, because usually it's a vague upgrade. We like a market perform. We're near-term bullish, but outperform overall. But they never say buy or sell, right? So here you go. They're saying we're taking it from the sell list to the buy list. The stock's at $12.50. Our target is $10.
Yeah, that's good.
Somebody
That's real
help
good.
me. Can somebody help me here? I don't know what the hell's going on. That's why I just trade crazy, weird quantum stocks.
I've become convinced that sell-side research only exists to trigger algos, right?
Oh, yeah.
Because the algos are the only ones that trade off this information.
Right. They see word upgrade, Goldman
Right.
Sachs, and that's exactly why we do what we do.
Right.
Just stop talking about what these companies do, if they make any money or not. Again, we're at the point where this is the normally where I would get my ass kicked. Looking at some of these quantum stocks that were $1.50 trading at 13, 14, I'm dying to short these stocks, but you can't right now because this is where it's at. The money's pouring in, the volumes are increasing on the way up. You cannot get in the way of these stocks. And again, my bad was now I have call spreads on. I have a 5-7 call spread on a stock that was $2. We were just goofing around thinking, hey, we could lay out 40 cents for an option, sell a 15 call. You're risking a quarter to make $250, right?
Crazy.
You make the $250. Now the stock is 300% from where you're getting called
Crazy,
out.
man.
It's just nuts.
All right. You're crazy.
But one good thing about some of these stocks, they do have options. So we've been just levering up. Again, we're no longer in the lower priced options. So now if you're in the SOUN, we're already into the 19-25 call spreads.
Wonderful.
RGTI, we're in 10, 12 call spreads. It's absolutely incredible.
All right, guys, hit thebid.com. Kenny's trading there live every morning in the pre-market and also after the open, right, in normal hours, through the whole morning. Room is open all day. If you see moves like QUBT and you're like, oh my God, it's up 30%, how about trade this? And he knows because he does it every day.
We're all over it. Yeah. And we still got some of those. We still got the mob, over 333. We got paid. That I sold on the way back down to 333. I'm not getting rid of the rest of it unless it breaks 250. That's a big magic number for the swing trades. All right. But come to the room. I'll update you on all the names.
Hey, Kenny.
Later.
All right. Let's bring on today's guest. We've got David Lundgren in the house. He's a portfolio manager at MOTR Capital Management, and he's here. And he has charts. So let's do it.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Hey, David.
Good morning, gentlemen.
Hey.
So, Spencer, I was talking to Dave this morning. I said, you could come on and talk about golf and football and sailing for 30 minutes for all I care. The inmates are running the asylum this week.
This could go anywhere. Yes.
Yep.
You doing anything nice for year end? You travel for the holidays?
Our family's starting to spread out as the kids get older and whatnot. So this will be our first year in our oldest is 31. It's be our first year where we're not with him for Christmas. So we are hanging out, but we got two of the kids, and then we're all going to Maine after, which we do every year for a New Year's celebration. Karen and I started the party 20 some odd years ago, and we've been doing it every year. And then as the kids got older, it became their party. And
of course.
They're nice enough to still invite us. So
That's nice.
Where in Maine do you guys go?
Up near Sunday River.
Oh, that's lovely.
Yeah.
Very nice.
Yeah.
How's golf been going for you? Can't play that much this time of year, can you?
Well, no, our club has actually got a winter course, so I can play all throughout the winter. Last year I played in January and it was like 50 degrees. So it's a shortened course. You have to tee off on the red tees. It is a temporary green, but you're golfing in January. So
how do they do it? Because the ground is frozen, no?
It can be, but like in that January last year, it was I think it was 50. Maybe it was the year before, but it was 50 degrees when we golfed.
That's so cool.
So it was cold, but it was golf.
I can't imagine. That's awesome. I like playing like a fall round when the leaves are falling and stuff. A little late October, you get a nice sunny day. Those are the best. All right. So let's dive right in. Was writing about you this morning. I went back and listened to some of our podcasts that we did months ago now. You said at one point that when you enter a new trade, we bring David on and we say, this is one of the best technicians we know, best, managers, one of the top trend followers out there. David comes on, and one of the first things he says to us is, when I enter a new trade, I expect to lose. Give us a little background. I don't want to have the same conversation we had on the podcast. I want to give people a little taste, and then we'll send them. They can go give it a listen themselves.
I mean, there's just quickly. I mean, if you just the whole concept of the expectancy formula is that you basically take how often you're right times how much you make when you're right minus how often you're wrong times how much you lose when you're wrong. Do that math, and if it's a positive number, keep doing what you're doing. If it's not positive, stop. Right. And I think the perception is that people think you need to be right all the time to do this. And the truth of the matter is that even the best are wrong a lot. And when I say a lot, I mean like over a full cycle. If you're right half the time, that's a lot.
That's great.
The problem with bull markets, like if I look at my positions right now, I think 87 or right around 90% of my open positions are in the money.
Yeah,
must be because I'm a genius, but it's not. We're in a bull market. So the truth is, over time, it's 50%. And if you go into this expecting anything more than that, your expectations are misaligned with reality, and because of that, you won't be able to function. You're going to take everything personally. You're going to sell because you're down versus sell because something actually happened technically, et cetera. So
when we talk about like launching a new product that's backed by a system, everybody asks about the win rate. And I try to tell them, ask about the average winner versus average loser.
Yeah.
Oh.
Yeah.
And then in bear markets,
people don't they don't want to lose.
Right.
And they want to they want you to give them the idea, and they want to make money on that idea. But the truth is, portfolio management is taking a lot of different positions, diversified different ways, whether it's across asset classes. In my case, I diversify across pattern entry. So I'm not just buying everything that's up and to the right. I'm trying to buy things that are turning, things like that. And I also try to buy ugly charts with specific parameters on them. So it's just to diversify the portfolio.
You're diversifying by pattern. In other words, if you're buying all the same pattern, right, we keep coming out of these bases and it keeps working. What if that pattern stops working and it's all that you're doing?
Yeah.
Right.
Yeah. That opens you to the proverbial momentum crash. One version of it anyway.
How low will your win rate drop in a bear market?
Well, in a bear market, the win rate will drop to probably 30-35%, maybe even less than that. But what also drops is how many trades I put on and the position size. That's so right. if you track your win rate and you see that, like right now, I track it all the time and it's like right around 90%, I should keep doing what I'm doing. Yeah. I should stay long, and I should just not worry about all these bricks in the wall of worry that everybody's worried about. But when you begin to notice that your win rate is beginning to deteriorate towards something more normal, like 50% or even worse, that's the market telling you what you need to know. And rather than taking it personally, you should respond to it.
So you are using your results as feedback, and then inputting it back into your process and saying, right, I'm going to come off the gas a little bit. That win rate's come down. Exactly. Now, that in reverse, you're having a banger year, 90% win rate. Do you go crazy and start buying call options and stuff? Do you do anything differently and get more aggressive, or are you just putting on more trades and maybe more size?
So one of the ways that I also diversify is by time frame. So as you know, Steve, almost all, like 90% of what I do is long-term trend following. I'm trying to find 10 baggers, kind of an approach. But I also diversify by time frame. So I also do swing trading, which I think is mostly what you guys do, certainly on the show. And the gentleman before me was obviously doing some pretty short-term trading. So I don't go that short-term. And you'll never, by the way, hear me say that this stuff is easy, which is what he said. It's like, I almost fell out of my chair when he said that. What I will do is in an environment when I seem to have the Midas touch, I'll do a lot more swing trading. But when the environment's deteriorating, I back off on the swing trading, and I might even begin to introduce shorting.
Okay. So you're trading like little, coils, looking for a pop out of a bull flag, catch a little follow through, and then you're out. Like, how short term are we talking?
So good question. I mean, my short term is still measured in weeks.
Got it.
My long term is like, I own stocks that I I hope to own for the next, well, certainly through this bull cycle.
Right.
And then if I can get through a bear market and still own one of these stocks, I'd be very happy about that. Because as I said, what I'm trying to do is identify 10 baggers.
Yeah.
And
secular leaders that will do just fine through a bear market.
Yeah. Yeah.
And then what will that mix get like? Like how much swing will you have as a percentage of your overall portfolio?
So it's 90% at all times. Whatever my equity long position is, it's 90% established trends. Then there's 10% what I call explorations, and those are stocks that are beginning to turn after having completely blown up. Okay. And then in a bull market environment, I will also take an additional up to 20% in swing trades. So therefore, if you do the math, that means I can get 120% long. And the way that I get to 120% long is by taking on swing trades, which enables me to be much more tactical about that by taking my leverage back below 100 if I need to, all with the swing trades. So I'm not trading around my long-term trend follows. I want to just hold on to those and let them grow.
And when you say established trend, that's something that it's a chart you look at and deem the path of least resistance is higher now. There's some sort of primary reversal in place, rising 200-day, something like that.
Yeah. Yeah. And they generally, not all, but they generally have the fundamentals that are kind of required in order for a stock to do really well over time.
All right, let's dive into some of these charts that you sent over. So if we start at the top here, when turkeys fly, throw up slide 5, guys. Let's go through this. I didn't know this.
Yeah.
Are they flying, or are they like long jumps?
So they're more like long jumps, and the perception is that turkeys don't fly, but they actually do. In the way the turkeys basically fly short distances, and they can actually fly very quickly to an elevated spot to seek safety or whatever. But the impression is that they don't fly at all, but they do fly. But the reason they don't fly over long periods of time is because their body and wings are not built to fly to head south. That's why you see them all winter up here, in a very annoying fashion, crossing streets in packs in the middle of the winter. But the two things about this is, one, there's this impression, accepted notion that the turkeys don't fly. And then there's also this idea that now that we know they do fly, we also know they won't fly for long periods of time because they can't. So these are basically the slides from last month's video for the subscribers to my research. And I'm basically making this idea that, number one, there's this perception that markets just crash all of a sudden, just like there's this perception that turkeys don't fly. But they don't just crash all of a sudden. And so that's nice to say that. But what I wanted to do in this video is just kind of walk you through how, like, the greatest crash of our generation was the global financial crisis. And that didn't come out of anywhere. The market had to deteriorate first in order to allow it ultimately. And I think I've said this speaking with you in the past on the show here, is that the market can go down 5% whenever it wants. So it's kind of doing that right now internally. We've actually had a pretty oversold condition internally right now. And there's nothing you can do about that. So the more important thing is, as I said earlier, you have to expect it. And then you have to understand, are we in an environment where 5% turns into 20%? Or are we in an environment where 5% turns into new highs? And literally, that's all you need to know. You don't need to forecast the future. You just need to know what kind of environment are we in right now without any concerns about the future. And I do believe that if you can do that better than the next person, that's your edge, because everybody's worried about the future. They can't even tell you what's happening right now. Yeah.
So let's walk through it. I mean, when you say market internals are oversold, you're indicating weak breadth.
Yeah. So, this won't be in these slides, but like right now, as an example, I didn't check to see what happened yesterday, but let me just, in case I need to update this statement. Yeah. So yesterday would have been I think it's the 11th day in a row with the RSP, which is the equal weighted S&P, closed below its open. So it has a dark candle. That's the 11th day in a row of doing that. And in its 20-year history, that's only happened 2 other times. So forward returns are positive. They're not explosively positive, but they're not bearish. But the point is, you're down 11 days in a row below your open. That's a pretty oversold market environment. And then just the breadth oscillators are oversold. The percentage of stocks above the 15-day average, I think, is around 25%. So we're pretty oversold internally. Now, this is giving rise to this concern about the Hindenburg omen or whatever the heck that is.
We were just talking about that. Yeah.
Yeah, it kind of like makes sense, but if you actually look at it, it's wrong a lot. And it's one of those things where, like, you know, when I do turn bearish, it's not going to be because the Hindenburg omen gave its fifth sell signal. It's going to be because the market actually deteriorated to the point where it can actually let bad things happen.
Yep.
So when you look at this risk gauge, as you see it here, if you fast forward one more
next
slide, I think you need to let the numbers in. Yeah, there you go. So this was when I did the video. This is where the risk gauge was. In the long term, medium term, and short term, it was in risk on across the board. And just to level set on this, what the long term is like looking at the quarterly chart. Medium term is looking at the monthly chart. So my short term, because I'm a long term trend follower, my short term chart is the weekly chart, which is not right or wrong. It just is what it is. If you're trend following, you can't really look at the daily chart, or certainly not the hourly chart, right?
Quarterly, monthly, weekly. Love that.
Quarterly, monthly, weekly. And so what we want is to look at this and say, okay, so this means the market's going to explode higher. That's what we want, but that's not what it's doing. What it's doing is saying with the conditions as they are, the odds that the market's just going to crash right now are low. What does that mean? How can I turn that into an actionable decision? That means that if the market pulls back 5%, you want to be buying it. Mm-hmm. If the market pulls back 5 or 7 or 10%, you don't want to be shorting it.
And what is
you
the
don't
market?
Want to be selling, liquidating.
And what's the market of this? Is it the equal weight S&P 500? What are you using as the benchmark for the market?
So I track about 2,800 stocks individually. So I call it the Motor Universe, but it's 2,800 stocks across obviously all caps and sectors, et cetera.
Equally weighted. Equally weighted.
That's right. And so what I did with this set of slides is I then just walked, because this is where it is right now, and I'm just saying that from at least in my process, if you get down 5% or 7%, you want to be buying it.
Yeah.
So this is kind of where it was. Remember in August when we had that record volatility surge?
Yeah.
And that came out of nowhere. The market was down like 8% in 2 days. And I think I was actually on the show right around then, actually.
And you're seeing similar readings today to early August.
Yeah, and if you remember, because I think I was on 2 days after that volatility surge, and what I said on the show was that I don't know what the future is, but I do know that the conditions don't allow for down 10% to turn into down 20 or 30. So right. I was in there buying, and I was in there selling puts. So that's all it's saying, and that's all you need. You don't need to know more than that, and then just handle it one swing at a time from there. So that's all nice for me to say, but what I then am doing, and I'm actually, this is the first video set that I've released, but I'm showing how the risk gauge behaved through the global financial crisis. And so that's what the slides are. If you want to go through them, I'll go through them with you. But the point is that as the just keep so what does this mean? This doesn't mean the market's going to explode higher. This means that if you get an oversold condition, don't short it or buy it. You should buy it or certainly don't short it. So if you just fast forward, you'll see you get another oversold condition and then a new high, and the risk gauges barely budge.
Yep.
All right, keep going there. So you got that oversold, new high, risk gauge barely budged. So here you are, big sell-off. And now look at the medium term risk gauge is now down below mixed. Remember, this is the monthly chart. Right, yep. You got a new high in the market. The market's kind of treading water, not looking like it's doing anything. This is a year before the global financial crisis.
Wow,
what on earth is the monthly time frame doing below mixed with the market at new highs, having just hit a new high? So I mean, again, this because it's mixed. So when you step back and look at this, what you're really trying to do is, as I said, the market can be overbought or oversold whenever it wants to be. There's nothing you can do about that. So what you really want to know is what should you do about it, right? So as this begins to deteriorate, as this begins to drop from risk on to mixed, all it's saying is that now both matter. Oversold matters and overbought matters, right? So now the next overbought condition or the next oversold condition, you should do the opposite. So, And so now as you go along, you can see that it begins to deteriorate. So by now it's like we're now starting to get traditional technical indications that there's something wrong, and the nature of the risk gauge has now open the possibility that this is neutral at best, possibly quite bearish. So in this window of time, this is back when I was at Wellington, we were pretty bearish by this point.
This is not a dip you're buying.
This is not a dip you're buying. This is everything's below mixed. Oversold is not an oversold you want to be buying. And this is the first one really in several years that you did not want to be buying.
This is so great. I just want to clarify for the chat before you keep going. There was a question in the chat saying, so he's saying a dip is coming. He's saying a dip came. And this was, I guess, more of a stealth correction over the past few weeks than we had back in August, because you can't see it in the NASDAQ 100. You can't see it in the S&P 500 because the Mag 7s have been so good. But if you pull up a chart of the RSP, like an equal weight S&P 500, you could see what David's talking about. We've already had a little correction. We've already had a little dip here. It's just the biggest, best stocks haven't participated in that sell-off.
That's right. I mean, I think I just ran these numbers today to have them handy for you, but the average stock month to date is down 2.79%. Median is 279. Yeah. And when you look at it from a median perspective, the only sector that's up month to date is tech, and it's actually down. It's every sector is down median on a median basis. Tech is the best one. It's down 15 basis points median. So that's what's happening internally. Now, is that beyond expectation? No. How could that not be within expectation that every sector is down to begin a month? Who cares? The more important point is what's the context. The context is right now the risk gauges in the long term and medium term are in risk on, and the short term risk gauge is, I think it's at 5 right now, which is just revealing that internal correction that's taking place. That's all it is. So, as it stands right now, with the risk gauge where it's at, it's like the next oversold condition you want to be buying.
And then are you buying it in the same way that you did in August? It's just the same playbook. You're running it back.
Yeah. I'm always, I don't buy anything that's doesn't have technical structure that has a trend established to it.
Throw the charts back up. I want to finish walking through the sequence because you see the big, next, move on. Show the next one. Okay, so this is what happened next. We're in 08 now.
Yeah, this is not even close to the worst of guts, but it's already telling you that just get out of the way. Like if you're trying to like right around now, the market's probably down 20%, and it's like, oh, you should probably start bottom fishing. And this is saying no, wait. So
it eventually turns.
Yeah, if you keep going, you'll see that it's not for a while though.
So here's March.
Yeah. So the way that the market tops, right, is the market lies when you really want it to tell you the truth. So at the top, it was lying. It was out to new highs, sitting right at the highs, and the gauge, which is just, it's not like it's rocket science. It's based on pure trend following technicals, was telling you the opposite. Now, with the index plunging into the March 2009 bottom, look at the short-term risk gauge.
Wow. And what are you using? Just weekly charts to see if the trend is turning for most stocks beneath the surface? Yeah. How did that surge up to 2?
It's a combination of these concepts that I refer to as inviolable. I think I've mentioned this in the past, so I'll just be quick about it. But this inviolable inputs. And so it might be helpful to say what's not in the risk gauge. What's not in the risk gauge are things that are very important. They're just not in the risk gauge for explicit reasons because they're not inviolable. So what's not in here is valuation, sentiment, what the Fed is doing, whether yield curve's inverted or not, Hindenburg omens, all these things that are just like, some of them are important, some of them are not at all important, but they're not the same every single bull and bear market. So the only thing that's in this gauge are things that are always true in bull markets and always true in bear markets. And it's inviolable. So it's you can't have a bull market with these things in risk off.
So while you'll defer to the system, how much are you thinking about or weighing at all stuff like valuations and what the Fed is doing and just overall liquidity in the market?
None.
Zero.
Nothing. Zero.
Love it. All right,
Zero.
Keep going.
Yeah. Yeah. So that was it.
This is great. Yeah.
Thanks.
I really like the turkey reference too. You must have done this around Thanksgiving.
I did it around Thanksgiving, yeah. If anybody wants these slides, they can reach out to me. I'm happy to. Actually, I have a YouTube channel. If you follow me on the YouTube channel, I make these slides available
Spencer, can we drop a link to David's YouTube in the chat for everybody, please?
Thanks, Steve.
All right. So what do you do now? I'm looking at the NASDAQ 100, even the S&P 500, basically at highs, like the chat was just saying. What correction? RSP looks very different. When do you know when to step in?
Not by looking at the S&P and not by looking at the Qs. At least not oftentimes not looking at the popular averages. So one of the things that that risk gauge that I showed you, I calculated on a bunch of different things. I calculated on the entire market, but I also calculated on the 5 market cap quintiles. And as you can imagine, when you look at the risk gauge just on the top quintile, it's been bullish for 2 years, 3 years, 2.5 years.
How are you breaking those out? Like what's the top?
It's
200 plus.
It's like 18 billion to 3 trillion, I think, right now is the top quintile.
Okay. Wow.
Right. And again, this is 2,800 stocks. So there are stocks in here that have like $100 million market cap. But the point is that the market cap quintiles, when you look at their individual risk gauges, have been neutral across the board, except for the mega caps, the top quintile. That's changed. It changed last week. The number one quintile of market cap is right in the middle. It's quintile number 3.
Really?
Yes. So if you believe the market's good at assessing what the future looks like better than anybody, that's why I refer to it as the best fundamental analyst on the planet, the best macro strategist, the best political strategist on the planet.
Yep.
All we have to do is figure out ways to listen, and that's what this whole risk gauge thing is about. If you believe the market's good at that, and you're willing to listen to what it says, you have to say, like, well, why is the market beginning to reward the middle market cap quintile?
Yeah.
If the shit's about to hit the fan, why would it do that? Right. So to me, in my long-term trend following portfolio, I don't own any of the Mag 7 names because they're too expensive. I'll swing trade them in that 20% of the portfolio, but I don't own any of them for that long-term portion of the portfolio. But now that I'm starting to see that middle quintile take off,
I feel like there's got to be a lot of the speculative growth names in there. I know where you're at, looking for outlier trades, and some of these quantum computing, space and exploration names, even some of these archy names like fintech names are all trending well. Are you playing this theme?
Yeah, all of those names, pretty much anything qualifies in the portfolio for a swing trade. Like, I don't care about fundamentals. I don't care about relative strength. I don't care about any of that stuff when it comes to swing trading.
Yeah.
But what I really care about for long-term trend following is that it has to be making money. Returns on capital have to be above average, has to be low leverage, things like that actually contribute to the possibility that this thing's going to be a 10 bag over the next 10 years.
And you care a lot about relative strength in that instance.
All very much so.
Right.
Very much so.
But completely ignore it for the swing trading, really.
Yeah.
Wow.
Yeah, because you don't need a stock to be in the top decile of momentum for it to go from 25 to 35. You don't need that can happen for in the short term for any, but in that window of time going from 25 to 35, its relative strength will turn up, but it's not necessary.
Catch the mean reversion in the relative trend for a quick hit.
Yeah.
David, this is always just such a pleasure having you on the show. Thanks for coming. Thanks for walking.
Thank you, Steve. Thanks for having me back on. I appreciate it.
Guys, check David's workout. His YouTube link is in the chat. And I think, David, do you want to say your email too? You really want people to email you? You sure about that?
I don't know.
Yeah, it's D.Lundgren at MOTRCMR.com. So MOTRCMR.com. And you can check out the website as well.
We'll drop that in the chat as well.
Yeah, David, I'm a little boring though. I'm not as sexy and fun as you guys, so it might be it's a little bit of a different service.
You're one of the best to ever do it in my book, my friend. And
boring is good.
Appreciate that.
Boring is good. We should all be more boring.
Have a great holidays. Merry Christmas.
Thanks, guys. You too. Thank you so much.
Later.
See you guys.
I wrote it in the post this morning, and I mean it. I don't say things I don't mean. I've learned as much from David as anybody, any technician, period. He's been such a great mentor. Just in the limited conversations that I've gotten to have with him over the years, I mean, he is just so full of knowledge. The lessons that I've taken from him and stolen from him have really changed the way that I trade and analyze markets. So what a treat to have him on the show. He's always so generous with his time. Hung out for 30 minutes, walked us through what a scary dip that he doesn't want to be buying looks like, to contrast that with the very non-scary dip that we're having right now. So it sounds like he thinks Santa Claus is coming.
It sounds like he agrees with you.
Look,
And that's the vibe that I got. The impression that I got.
I'm ready for a Santa Claus rally. We're going to do this thing. We're going to dress up for it. When is Jeff?
It's all night Donkey Kong.
That's right.
Where is he? When is Jeff Hirsch coming on the show?
I don't know. He's not on the schedule at the moment.
We gotta.
I also don't know if we're doing shows next week. I mean, I know we're doing shows, but I don't know if we're doing like how many shows we're doing next week, right? Because we have a Wednesday holiday. We have back-to-back Wednesday holidays, which is quite irritating, right? So
we need Jeff on January 6th or 7th.
We could arrange that
After the Santa Claus rally period. Because if Santa Claus fails to call, the Bears will come to Broad and Wall. And we got to know these things.
I don't know it.
Florida
all right. Patrick, are you here? Patrick is here, right?
He did he.
Yeah, Patrick's in the house. Let's talk about whatever charts are on his radar.
Yo, hey, Santa's coming to town, huh?
He's got to.
Yes, dude.
David said it. It must be true.
Doesn't have to.
David is one of the best, isn't he?
Really is. Really is. And you know what, Patrick? You're one of the best too.
No, but I love that quote of his. The market's the best fundamental analyst out there. I mean, it just sums up so much just in that one statement.
And he just expanded it, and he's right. It's the best geopolitical analyst. It's the best, Fed analyst, the best economist. Like, we could fire all of these people.
Luckily, we don't got any fundamental analysts or geopolitical.
Well,
analysts.
I mean, there's a time and a place, right? Steve, you do a little. You say you don't, but you do.
Yeah,
even JC does. He says he doesn't, but he does.
He does a little what?
Fundies.
We did a little fundies.
He
Hey,
does the fundies that you give him.
hey, we're gonna do a lot more fundies in the future.
Yeah.
We're like closet funding right now.
Yeah.
We closet funding. We're not completely honest about how much we might use fundamentals.
It's
more to come.
But fundamental data is all encompassing. It could mean ratios that are just guesses.
Yeah.
It could mean market cap is fundamental information. Right?
So we're putting Sam through fundamental analysis 101 school right now. Like, he's going through the gauntlet. I mean, he is learning so much, working on the beat report and just tracking all these companies' earnings reports. We had a call yesterday, and he said, you know what? Fundamentals aren't as easy as technicals. They don't scale in the same way. You know what I mean? If you're looking at material stocks or energy stocks, you're looking at all these different valuation metrics. If you're looking at the banks, you're looking at price to book. If you're looking at tech companies, focus on the top line growth. You know what I mean? Like, everything has its own nuance. You can't just scale it and say uptrend.
Well,
right?
that's why fundamental analysts are specialists in their industry, right? You have an energy analyst or a tech analyst, something like that. But with us, we can look at Fartcoin or we can look at Honeywell, and we're going to apply the same principles.
And for people who are just starting out, if you're in college and you're watching this show and you're unsure, which direction you want to go, if you want to do the CFA or the CMT, if you want to dive into fundamentals or dive into technicals, listen to what Patrick just said. If you want to be a fundamental expert, be okay with being a fundamental expert for just banks or just oil and gas companies, right? Or just mineral companies or the software stocks. But you can't do it all. It's not realistic. There's not enough time in a life, I promise you. I know people who have tried. You can't do it. Technical analysis, like Pat said, you could go anywhere. You could scale it to cryptos. You could scale it to commodities. You could go buy some bond funds, right? You use all the same principles. They still apply. Nothing changes. So we could literally go anywhere, diversify our portfolios and our trading across any asset class that has public prices and liquid markets.
Or you could do what I've done, and which is the bare minimum, and learn like a couple of KPIs for every industry, and then
The
I
sort of
can sound smart that way, right?
No,
'Cause I know like
but you don't just
I know like
sound
3 things about everything.
But it's more than just sounding smart. A lot of time, that's all you need, right?
true.
Like you need to know like 20% of the story, like the important parts. This company's dominating its industry, right? This is now the industry leader. Look, they're growing revenue at 25% while margins are expanding and they're growing their like. Sometimes you don't need to dive into the cash flow and the this and like just keep it simple, keep it high level with the fundamentals. A great growth story will be very obvious, right? And easy to identify with just a little digging.
Yeah.
I think
if you're going like
best at combining them are the ones that are aware of the fundamental and the narrative, and then they look at how the technicals kind of confirm or don't. The narrative and the fundamentals and all that, because that's kind of at those turning points when it changes.
That's absolutely the secret sauce, I think, right? When you say, hey, the fundamentals are good here, there's a really nice growth story, and then you could look to the trend and say, wow, textbook primary trend reversal and new leadership regime, bang,
right,
check all those boxes. All right, Pat,
what charts are you watching?
Yeah, what has your interest?
What are we watching? Oh man, I know it's beating a dead horse, but semis, man, they're just, it's really the keys to the market right now, and it's really interesting what's going on between Nvidia and Broadcom. It's almost like you're seeing the rotation out of one into the other, and it's happened real fast. It's happening in like 2 days, and it could be over in 2 days. You know what I mean? These are really fast markets, and you could see something where Broadcom hits its next target because it already hit one on Friday. So it could hit its next target in a couple days, and then that money goes right back into Nvidia. Nvidia repairs the neckline.
Yeah,
could happen real quick.
So that Broadcom Nvidia ratio is really starting to favor Broadcom, but you wouldn't want to kind of express that with a pairs trade. I don't think you want to short one and buy the other, right? If one's working super well, you probably don't want to be short the other one. It's probably also working, maybe just not as well.
Right. And I think the more important thing is that you look at the SMH where Nvidia is 22% of that or whatever, and that thing's holding up great. I mean, it's up for the 3rd week in a row so far, and that's with Nvidia breaking down. So, the rotation is the important thing. Is that the money's still staying in the semis? It's just going into a different one. And I said the market or the semis really hold the keys to the market right now. And as long as it doesn't matter if Nvidia breaks down, as long as the whole group stays afloat, and that's what's happening.
Look at Nvidia right now, dude. This thing looks so spicy. So we are just about tagging the VWAP from the August 5th morning disaster.
Okay.
And that's what you want when you fail a top, right? We just talked about it this morning. I said, you want a little surge to the downside. Explore a breakdown, right?
Yeah, because what is it doing in that time, Steve?
It's giving the bears a shot.
Right. It's running stops. It's freaking people out. Shaking people out.
Exactly. So you get a little shakeout low, and then that acts as the spring, right? To set off the new up leg and fail the top. Right. And I think, watch this candle today. It's going to be really interesting. I have a feeling we'll be talking about it again in an hour and a half on Spaces. But yeah, already wicking pretty nicely here. Let's see.
Yeah. What do you think? You think Broadcom goes to the next one?
Dude,
what is the next one for Broadcom? It's like,
listen, it's you're getting really greedy at a certain point with some of these Mag 7s.
Yeah, right. You might have to call it the Mag 8 soon.
Yeah. Hey, no, but shout out, congratulations. Do we have an applause banger here? Because Broadcom officially in the $1 trillion club.
Yeah, I thought we were adding Broadcom to the Mag 8.
Yeah, well, let's still call it the Mag 7 because it's a nice jingle, but we'll just put 8 stocks in it.
Okay.
We'll tell Dave Mazza tomorrow that he's got to add it to the Mags.
Hey.
What, like, how do you think that works? Like, does Kramer have to say it for them to add it? Let's ask that tomorrow.
I don't actually remember who came up. I know Kramer came up with Fang. I don't know who came up with Mag 7. Someone.
He doesn't come up with any of them. He popularizes them.
I think he actually did Fang though, but
He probably did.
Mag 7 was probably like a sell side note, honestly.
Yeah.
We
You read
joke.
those? They
but-
still do those?
Oh, well, remember there was Fang, and there was Fang, 2 A's, and there was Fan Mag.
The Fan Mag.
Then
No,
we got rid of the
that's never
Fan and just kept the Mag.
Yeah.
Right?
We had
Mag
MAGA,
7.
the MAGA index.
Here we are.
Yeah.
Pat, did you bring any charts or no?
Yeah, brought some charts, stuck them at the end of the deck.
What do we got?
That semis one is really kind of that important one I was just talking about, that first one on there. But we got Micron this week. You know, that's on the topics of semis. Micron sticks it up here. And you're already seeing it break out of that little coil. You know, this was probably one of my favorite trades this year. It was breaking out of that massive base, and it hit its target, but then it gave it all back. But it's just kind of retesting. I mean, classic retest, nice coil action there, you know, tightening up for a big move. It's either going to break out or break down. So breaks down, it's probably going to hurt the semis. But if it doesn't, there's your next fuel for the semis, you know.
I love what you've done here, Pat, because if anybody is looking at or sharing this chart and not zooming out 25 years, you're making a grave mistake. And the reason I say that is go look at Nvidia, go look at AMD, go look at Lam Research or KLAC, go look at any of these other semiconductor companies, and go look at what happened to them after they reclaimed their dot-com bubble highs. These are massive multi-decade bases. They're slow and sloppy to start. They come with failures and false starts almost every time. They take far longer than you ever plan for them to actually resolve and start working. When they do, look out. They're absolutely explosive. And Micron, Pat, you nailed it. It's happening right now. We got the shake. We got the failure. We got the messiness. Now it's go time, baby.
Yeah.
They wore through this corrective phase. The whole back half of this year has been shitty for semiconductors. They hung up. Dude, I don't know if there's any that I like more than this.
Yeah.
I like the setup against the prior cycle highs, which we have here with Micron. We also have that right now with Lam Research, with Applied Materials. We have it with Monolithic Power, MPWR. Go look. It's the same thing, right? They came in, they tested those prior cycle highs, they're digging in, they're rebounding. What's different about those charts is they don't have that price memory that goes back another 20 years to the dot-com bubble too. Micron has that. This is a special level, I think, for Micron.
Yeah, it's just kind of like a sleeping giant, right? And how about that weekly RSI? It hasn't gotten oversold in 9 years. 9 years. What were we doing 9 years ago?
That's a long-term, that's a structural bullish momentum regime.
Yeah, so gave it all back, but RSI still saying bullish regime here. So
yeah, so GameStop, some questions about the GameStop. My calls were a straight 0. Those went to 0. We're in the common now. I'm gonna try to run this thing with the kitty. Kitty cat.
On slide 2 for a moment, if you can. This is what we have. This is the story of the morning right now. Slide 2. That is the story of the day. In the moment, it could change. But we have a chip and dip this morning.
So chip and dip.
We've got a chip and dip.
Oh, but it's more like a dip in the chip.
Yes. Also true.
The daily.
That's what's happening out here.
Hey, look,
very close eye on this
stuff.
What?
We do Hindenburg omen stuff.
Yep.
Oh, so Pat, my BlackBerry calls are paying.
Ooh, the BlackBerry.
BlackBerry was going to. They were supposed to own the dashboard. They were going to own the dashboard. The one screen that we can't get away from in our lives is our dashboard.
The party might not even be. Listen, this thing reports earnings on Thursday, so the real move could be yet to come. We'll see.
I feel like it is downright un-American that I cannot plug my phone in to the screen in my car and watch football while I drive. That should be my right.
Hey, see that big candle from BlackBerry from 3 years ago? That was I was getting involved then.
Some of these rules to protect the consumer are just so ridiculous. Are you telling me that while you're driving your car, you never turn your head and look out the window or look at the person in the passenger seat and say something. You don't take your eyes off the road for like a split second. I could check a score. Not a hot take.
You could.
I think seatbelts are bullshit too.
Okay.
That's a hot take.
That's a take. Definitely a take.
Was BlackBerry pretty shorted? That one was, right? I can imagine
Yes.
it was.
Yeah, dude. But no, so we did the whole thing. We did the meme stock thing, Pat. So we did GameStop, we did AMC, we did BlackBerry. Mixed results. Look at AMC. Not so great over in AMC land. But BlackBerry looks fantastic. These are all very similar setups to us. This was kind of our meme stock basket. I'm in the Chewy too, but that's just because I'm a big customer. I love Chewy. Did you get the Chewy
meme
pickles?
So we do use Chewy, use Amazon too. But
Everybody says just use Amazon. Should I be using Amazon? All right.
they get you. So, but what's interesting about a lot of those memes is, and I know you've talked about it before, short interest has kind of left some of them, and some of them it's still there, but some of them, and that's the whole thing, right? That was the whole juice. That was half the story there.
It's just not the GameStop of old. And
Yeah.
the calls are still priced. Like the implied volatility is absolutely ridiculous. It's priced into the calls, yet it doesn't have the short interest that it used to have. So those calls are too expensive, in my opinion. That's why we didn't hit on them. It's not that the trade didn't move in our direction. The calls were just ridiculously expensive, and that's going to happen sometimes. But the market prices things wrong sometimes, Masks.
Actually, do recess.
Yep.
Get out of here.
Yep.
Start trading.
Trades
Whatever it is we do.
Yep. Mask.
Question. I was trying to figure this out last night. I'm in the market for a good under the radar Christmas movie. I've seen all the classics. Looking for maybe a new one or one that's under the radar, underappreciated. Anyone has a good Christmas movie? Drop it in the chat. Let me know.
Jingle All the Way is the best, but that one's not underrated.
It's pretty in my life. That's pretty mainstream. I quote that movie like, "Put the cookie down now," like,
Dude.
So
Sinbad, and what's the guy from SNL? He passed away.
Bill Hartman.
Dude,
God, Bill Hartman. Yeah,
I want to watch more movies with that man.
he is very funny.
Hysterical. My God. You know what's not funny anymore? SNL.
Dude, come on. Everyone says that. Everyone says
what
SNL.
happened.
For 30 years, it's been not funny.
What happened to this show? And Chris Rock made a very distasteful joke, and I love Chris Rock, but I think the joke that he made this weekend was absolutely disgusting.
Carry on.
I think the people that are like cheering on the execution of the CEO of United Healthcare
that's weird.
Are disgusting. Like, what a joke. What has happened to this country? The internet is absolutely out of control.
It's weird. Like you can be anti-US healthcare system, but also not anti-murder or not pro-murder, right? Like just because you hate the healthcare system does not mean murder is cool, right? It's murder, right?
Dude, that's some scary stuff.
All right. Red One. Come on, Die Hard. I've seen Die Hard 1,000 times. Die Hard. Come on.
I've never seen
that. Red One is new. That I didn't see that one yet. They're saying it's not bad. So maybe I'll check that one out. Silent Night. Okay. I've seen that out. Good to know. Thank you. That's what I got.
Watching a new show. Escape from Dannemora.
Oh, that's the prison one.
Dude,
is it good?
It's pretty good.
I've wanted to watch that. I know it's a few years old right now. I remember the story when that whole thing happened a few years ago.
It's apparently like based on a true story, which is
yeah. Upstate New York, man. It was a big thing up here. I'm gonna check that out. If you tell me it's good.
It's been good. We're 2 episodes in. We're hooked. We're gonna finish it.
Where is it? Where do I watch it?
Netflix.
Great.
Netflix.
You guys watching this oil show with Billy Bob Thornton?
I want to watch that. Isn't that like the same makers as Yellowstone or something?
I think so. Yeah. What's it called?
Oil Man.
Ask me.
Oil.
Yeah.
I don't watch.
Yeah.
I've seen trailers. That looks good. Pat.
Yeah, I've heard good things, but I haven't watched it clearly.
Yellowstone was such a nice show, and then it was absolutely terrible at the ending.
I haven't seen it, but I've heard it described as a soap opera for 40-year-old white guys. Is that true?
It's got
okay.
It was good. The first couple seasons were great, very entertaining. But now it's just like cringy, very cringy.
Landman.
That's it. John Wick nailed it.
I don't know. All right, what's the deal here? We got Spaces in an hour.
Yep.
We've got the Flow Show with Sean and Strazza at 1 o'clock. They're going to attempt to put on a live options trade on the fly. Be there 1 o'clock Eastern time, and that's it. We'll be back tomorrow. We have I'm looking at the wrong week here. Who's tomorrow's guest? Tomorrow's guest is Dave Mazza. That's what we got. Dave Mazza, CEO of Round Hill, Talk Mag 7, and some of their other growthy ETFs. And that's it.
All right, get ready for the shake and bake in Nvidia. Get ready to sell those puts.
Maybe.
Happy Tuesday, everybody. End the show.
See you guys.
Cheers.
I can't take no loss. I don't even know what it costs.